Alright, so today I'm just going to be going over what my intraday strategy looks like. I really only trade indexes, so like ES and NQ for intraday. I just think it's the easiest, especially for my specific strategy. I sometimes trade silver and gold, but it's really rare for me to do that. What I start off doing is going to like the longer time frame and looking for some sort of like confluence to go off of, like aligning with the intraday. So last week I used um I used did I this area a lot, like this fair value gap, this order block right here. I used that as a confluence, what like price was tapping into. There's accumulation all week last week, but it really gave good confluence for my strategy. So I usually mark out something like I'll just mark out this. Oh shoot, that's the wrong thing. I mark out this order block or something like this. We had this giant imbalance last week, which I don't want to mark out just because it'll take up the whole screen. So we have that. And then what I look for is I usually go down to the 15-minute. Um, I'm just gonna go off of. Let's go off of this day right here. I'll mark out the sessions. This is what I do before market opens, like around probably 8 o'clock. This is when I mark out these. So I'll mark out my sessions. We got pre-market. Let's see what else. London. That's right. Yeah. London and what day? That's long. Asia Open. Alright. So then I'll mark out the highs and lows of each session. So we got these lows for whoa. These lows for Asia. Highs, London highs. I'm not gonna mark out Asia highs because they've already been pushed through. And then that's basically it. We also have these London lows, which I'll mark out. Okay, let me make these a different color just so it's a little easier. I'll make it dotted, red. Okay, that one doesn't really matter, but I'll still do it. And then I'll look for some type of breakthrough or break of structure. So we have a clear liquidity sweep, not a break structure, a liquidity sweep, right at market open, which we can see right here. That's pretty happens a lot on the charts. Usually almost every day, especially last week it happened basically every day. There's a liquidity sweep of session lows and highs as market opens. And then like I marked out earlier, it taps into an imbalance range, which gives even more confluence. And then I'll go down to either the 1 minute or the 5 minute. I usually go to the 1 minute. I don't know why. It's just easier for me to spot stuff to actually get my entry off of. So where was I? I go to 1 minute. I mean, there's also a clear. There is a what's it called? An SMT. So it would have been easier to take ES on this. And if you guys don't know what an SMT is, it's basically where you can see how ES is breaking through this liquidity on the session, this Asia session liquidity, and while or NQ is breaking through Asia session liquidity, and then ES during this time has already broken through it at 8 and doesn't break through it again. So that creates an SMT divergence in the market. Basically creates, since these are correlated indexes, it creates like a lagging index. So it shows that this one is like waiting to push up, and is going to most likely be pushing to the upside because ES already has and is moving up. So that's what that shows. That's a good confluence to go off of, which I like to use a lot. And then now I basically just look for some sort of entry model off of this. I'm not gonna lie, this one does not really have the best entry, except for it's probably easier to spot on ES, but we can see just well, we have the fair value gap on a long time frame, and then we can kind of already tell from ES that price wanted to push up to these highs, these session highs. So I would have probably just entered off of this trade through a break of structure of this high right here. Get my entries, target. I'd probably take this. I would probably take some profits here, and just the sessions. And that's basically it for that. And I would, when I take my first take profit, I would move my stop loss to break even. So I have 100% made profit on the trade. Alright, so I'm just gonna go over another another example of my strategy. Basically, I haven't really even said much about it. It's basically just session highs and lows and sweeping those session highs. And then there's just a lot of littler confluences that go with it, which is kind of hard to talk about in one video just because there's so much. But here, I'll just show another one with, I'll just go to the next day and show this. This one, I don't know if there's a great trade this day. Actually, yeah, there is. Alright, so mark out highs and lows. Not gonna mark out Asia low, dude, just because it already got swept. Mark out this high. And yeah, that's basically all I'm gonna mark out for the sessions. And then I usually also mark out the daily highs because those are also really good liquidity grabs, which we can see in this trade. I'm pretty sure I posted a trade recap on these last two trades a little bit back. But we can see, I just went way too far back. Go back to the 15-minute. Alright, we can now see price tapping into that order block range from a while ago on the longer time frame, which is it's a clear support area, even though I don't really like to use that because I'm more of an ICT trader, but it's clearly an area where price just keeps bouncing off of. We get 1, 2, 3, 4, 5, 6 taps, and it just can't break through that key level. So it's a really good area to mark out, and especially for this week, there's just so much. There's just such a good possibility that price is just gonna bounce off of it. So yeah, we get a sweep at around 8:45, and I'm pretty sure I entered off of this sweep, which is right before the New York Open, which is a horrible idea to do. So I learned from that mistake to wait for market to open, especially if I'm entering 30 minutes or after 9 o'clock. And then I'll move down to like the 1 minute again. Look for some confluence. I like to go off of fair value gap retracement, order blocks, or, and that's basically it. And equilibrium gives me even more confluence. And I would say, like, with the more confluence I have, I will increase my risk. On each trade, I usually try and risk around 0.5 to 1% of my paper trading account, which I think is good enough for now because I don't want to risk too much. Just be careful. And yeah, so I'll just go off of exactly what I would hope to do on this trade, but which I didn't because I already posted a trade recap on it. So we see a breakthrough of daily highs and all the session highs, and then re-breaks through New York pre-market at New York Open, come down, retrace into equilibrium. You can see here. Yep, goes through the 50% mark. I would delete that so you can see more. And we have an order block right here. Retraces into. Then my entry would probably be off of. I could probably even just do it off of. We need to break past the low, so I could do it off of this right here. Actually, no, I would wait for this low to be taken out because it's just like clearly it's more of a prominent low. And if we could just push through that price point, it just shows way more confluence than what we're used to. Especially with like all these imbalances to the left. You want to wait for like a breakthrough on a more prominent low. Oh wait, that was the wrong area. A more prominent low, just in case, because it just shows more confluence towards the downside. And yeah, so I would enter off of this break right here off of this candle close. I would target, I think for this, I would probably just put my stops here instead of all the way up here. And then I would target just the session low. And maybe if yesterday pushed below that, no. Yeah, I would target the session lows and hopefully get a good risk to reward. Take profits at just confluence to the other side areas like this here, this order block, and then here, and I don't really see much more to take profit on. So yeah. So and now I'm gonna just like kind of just talk about my strategy instead of showing more examples. So basically, yeah, here I'm just gonna go over here. Let's see. So go to a bigger font. Alright. Alright. So my first step to my strategy is to usually just mark out session highs, lows, and also daily highs and lows. My second step is usually to look for high time frame confluence, like near the sweep of the lows, like near the liquidity sweep ranges, so like above the highs, below the lows. That's basically it. And then third step, wait for a liquidity sweep of one of these areas. Fourth, look for a break, or look for the start of a trend change. Fifth, look for some sort of retracement, order block, fair value gap. Sixth, look for a break of structure or fair value gap, or no, inverse fair value gap, and enter off that. Seventh, oh, what the heck? What is happening? Alright, okay. Seventh, target highs or lows of sessions or daily, and take profits at confluences to the other side. And I usually will always take or put my stop loss up to break even after taking my first profit, take profit. And then eighth, or I don't even really need to say eighth, but for my stop loss, it's usually below the liquidity grab or just at like a clear area where my trade would be invalidated. And that's basically it. But I would say that for trading, I would say that technicals is probably less important than like your mental game, because almost every trader that actually fails, it's due to them being or having a bad mental, like they're fearing the market or entering too early or too late. So I would say the most important thing for my strategy and for me to actually start doing better is to enter at the right place, or don't enter too early into a trade, and just be smart about trading and don't fear risk. And that's basically it. So, yeah, thanks for watching, and please leave feedback in the comments. I know this is a long video, and it was really kind of hard for me to get to the point, and I'm sorry about that. I'll make a more elaborate or better and easier to understand trading strategy video sometime in the future, probably in a couple of months. Just wanted to show you guys what I'm actually looking for in the markets when I'm taking these trades. And thanks for watching. Please leave a comment, and yeah, thank you.